Hi friends, recently I've been getting a lot of comments about IT stocks. For example, these comments here where people are asking about what is the future of IT stocks, or this type of comments, for example, that should we take fresh entry into IT stocks right now as IT stocks have come down to a great extent. And thirdly, where am I investing when it comes to IT stocks? So I thought I'll create this video so that I give you comprehensive point of view on IT stocks. Although I'm a SEBI registered research analyst, I'm not issuing these as a buy or sell recommendations in this video. Please take this for education purposes, make some notes and do some research at your end as well to decide what you want to do with the IT stocks. With that, let's get this video cracking. Now, what you see on my screen is Nifty IT index, which represents IT stocks. And what very quickly you note here is that in November 2022, it used to be at around 27,000 level. And by December 2024, it went up to almost 46,000 level, all-time high levels in December 2024. But since December 2024, IT stocks started to tumble down, so much so that by October 25, when I'm recording this video, the index fell to almost 34,000 level. So a meaningful correction has happened since 46,000 level to almost 34,000 level. Now, if you understand the reason for this correction, and if we establish that the reason for this correction is a short-lived reason, then we know that the short-term problems will go away and it is likely to bounce back. But if we find out that the reason for this fall is not short-term, it is likely to be a long-term problem with IT stocks, then we really need to be careful. For us to be able to understand what is the real cause, what I've done is I've divided this fall into 4 broad buckets. Fall number 1, number 2, number 3, and number 4. I'm going to explain to you each of these falls with data so that you understand what has caused this fall, and secondly, what is my point of view for each of these reasons, whether they are short-term problems or long-term problems. Please listen to this commentary very carefully, make some notes if you like. I'm sure you're going to learn a lot. The first fall was between December 2024 to almost February 2025, and the main reason for this was AI. If you remember, Chinese DeepSeek came into picture in January 2025, creating a havoc in US tech stocks. And of course, when that happened, Indian IT stocks also started to tumble. On January 27, in just one single day, Nifty IT index fell by almost 3.35%, mainly because of fear of AI taking over. And this DeepSeek was seen as a challenge to even US tech stocks. Now, how big is the AI problem for Indian IT stocks? It could be really big problem for the companies that are not pivoting to IT right now. For example, let me speak about TCS and give you some live examples. First of all, the demand from clients is huge. If you can read TCS commentary, I was reading the commentary from July 2025. And if you look at the demand coming from various segments, for example, BFSI, which is banking, financials. And if you see the demand here, growth is being driven by rapid advancement in Gen I adoption. This is what the TCS management is saying. Not just BFSI, look at life science and healthcare. What TCS management was saying was that leading firms in US, UK, Europe, Japan, they are consolidating their vendors by leveraging AI. So there is going to be a lot of AI implementation even in the life science and healthcare sector. If you look at communication, media and information vertical, there also strong emphasis on AI and automation. Point is very simple. There is a huge demand coming from every sector for AI because there are some efficiencies, there are some benefits that people are able to see, and hence there is a huge demand. Also, it's extremely important that we learn AI because people without AI skills run a risk of becoming irrelevant tomorrow. So if you want to learn AI practically, I invite you to a 2 days live AI training program, which is happening on this weekend, Saturday and Sunday, from 10 a.m. to 7 p.m. Normally priced at 10,000 rupees, you can attend this program at zero cost thanks to our partners Outskill. During 16 hours of live interactive training, you are going to learn how to build a personal AI toolkit with 10 plus tools. Master prompt engineering so that you can harness AI precisely. Automate repetitive tasks and analyzing data without writing a piece of code. Creating professional presentations, images, and videos in just few minutes. Develop AI agents that can give you a competitive edge. Over 1 lakh professionals from 40 plus countries have already attended this course. So whether you work in tech, operations, business, HR, or any other field, this program is for you. Seats are limited and filling rapidly. So click at the link given in the description, secure your spot, and join the WhatsApp group for regular updates. But now comes the big challenge for Indian IT companies. How are they gearing up to fulfill to this demand? And again, this depends from company to company. Let me give you some insights from TCS and also tell you which IT companies are moving into the right direction when it comes to AI. Now let me speak about TCS first here, and what you see here is clearly that their management said in July 2025 that almost 1,14,000 people within TCS have been trained for high order AI skills. Now training doesn't mean anything here. What we need to see is that are they really implementing some AI projects or not. And for this, have a look at this screen. What TCS also said that there's a company called Foxtel Group, which is an Australian TV company, and for them TCS implemented a Gen AI solution, and this led to some efficiencies, for example, improving customer experience, faster response time, and all that. So there is definitely some projects that companies like TCS are doing. But more importantly, companies like TCS, they are coming up with new products and suites and improving and upgrading their existing products. For example, if you look at Ignio, their cognitive automation software suite, this one saw multiple new deals in first quarter of 2025. That is very, very encouraging. Another example here, TCS Mastercraft. So this solution moves companies or clients from their legacy applications to new modern applications. And this particular solution, they have upgraded, augmented with Gen AI and agentic AI capabilities, which is also very, very good thing. Now, as a result of all these initiatives, TCS in Q1 FY25 reported $1.5 billion of pipeline coming from AI. Now this is very, very important, and if I put this data in some context, I was looking at last 5 to 6 quarters of TCV, which is the total contract value or the deal pipeline in simple terms by TCS. And what you see here is that in Q1 FY25, their total deal pipeline was around $8.3 billion, out of which $1.5 billion came from AI, which comes out to be around 18% of pipeline coming from AI. So definitely there is a good demand that we can see from clients, and TCS as a company definitely has moved into right direction. I'm not saying that their entire pipeline is coming from AI, but 18% is not insignificant in my view. So point here is very, very simple. If you are looking to pick any IT stocks in Indian context, you have to look at how much of their deal pipeline is coming from AI, what sort of AI initiatives they are doing right now. I can give you a few examples. If you look at the top 4 companies like TCS, Infosys, HCL, in my view, if you look at these companies, TCS definitely is leading the charge when it comes to AI. If you look at the mid segment, mid cap stocks, for example, Persistent and Coforge, they look very, very good. Again, these are not recommendations here, but they are doing very good work when it comes to AI. Also, when you move down to small cap stocks, companies like Sonata Software, companies like Intellect Design Arena, these are the companies that I generally chase and track. And if you look at these companies, they are doing pretty well when it comes to AI solutions. Again, please also understand that I'm not saying that these companies have moved 100% of their operations into AI. No, these are the companies that have taken some significant movement into AI, might be 18%, 20% of their deal pipeline coming from AI, which is encouraging. So these companies to me are not likely to die down. These are likely to sustain over a longer period of time because they are making the right moves right now. With this, let's come back to our chart. So far we have understood reason number 1, which is AI. Now comes the reason number 2, which is where the fall started from almost here February 2025 to let's say April 2025. This fall number 2 was mainly because of fears of US recession. I don't know how many of you are following the news, but if you remember this article that came in March 2025, because of recession, IT stocks started to tumble down in India. IT index fell into bear territory. Why? Simply because there was a fear of US recession. But this fall was very short-lived because in May 2025, a lot of people started to say that, you know what, US recession possibility has come down. In fact, JP Morgan had published a report at that time that the recession possibilities have come down from 60% to almost 40%. And what did we see? We saw immediate rally in the IT index. It went up to almost 39,000 levels immediately within a few days of time, gaining all of the fall that has happened from almost February 2025. So this fall, we can clearly see that it was a short-lived fall. It is a short-term problem. It is not likely to impact in the next few weeks or quarters. At least right now, there is no possibility of US recession that we see. Now, just when IT was rebounding and was at almost 39,000 level, another problem hit Indian IT companies, which was mainly the tariff related. So between July 2025 to almost beginning of August, the key issue was that US and India trade talks were stalling. And as a result of this, what happened was IT stocks were also getting a hit. There was an IT sell-off. And in fact, by 28th of August, because the trade deal was not concluded, US slapped 50% tariffs on Indian exports to US, and therefore there was a massive sell-off, and we saw Indian IT stocks also tumbling upon. Is this a permanent issue? Of course not. We are likely to have a deal with US with whatever shape and size whenever that happens. But mark my word, the day US and India have a trade deal, we are likely to see a relief rally in IT stocks. Very much like this fall that we have seen because of sentimental issues happening between US and India, same thing is likely to reverse when we have a trade deal in play, because as of now, IT companies have been kept away from tariffs. So there was no reason for IT stocks to fall. It was mainly sentimental issues, and this is likely to get corrected in the shorter term as soon as US and India sign a trade deal. Now coming back to our chart, slowly Indian IT stocks started to recover and they went up from 34,600 level to almost 36,500 level. So 2,000 points Nifty IT gained, but what happened? We got another bad news. What was the bad news this time? It was about H1B visas, and immediately when this news came out, this index fell to almost the same level, 33,700 level. Now let's talk about the H1B visa issues in a minute, and I want you to understand few data points. See, first data point is that it is not a massive problem for the IT sector as of now. It was a big problem back in 2017. ICICI Research published this data, 42,000 H1B applications back in 2017. It has come down to almost 50% now, only 20,000 H1B visa applications. So the impact is not that huge. It really depends from company to company. For example, again, they published a very good data here that by company, they have published how many H1B visa applications have been made by these companies. TCS number 1 at 5,800, Infosys 2,000, and you can see this data here in terms of how many applications they made in 2025. But it's not just about the application, it's about what is going to be the impact on their earnings. For this, ICICI published this report here, and you see here how much of earnings impact it is likely to have per company. So TCS around 1.52% is likely to be the negative impact as per this estimate. It may not be true. Again, this is just an estimate. Infosys 3.45% only. If you look at Persistent, that is likely to get hammered down because of this 12% earning impact. Birlasoft 14%. So again, from company to company, this H1B visa issue may impact their earnings. This data will help you make that decision here. Sonata only 2.56%. If you look at HCL Tech, 3.08%. So again, the impact varies from company to company. This is a short-lived problem, and I don't think this is a long-term problem, because anyways, Indian IT companies have been reducing their dependency on H1B visas. Now, the reason I have explained to you all these 4 reasons is important. Why? Because you understand the correct picture. And more importantly, the question you may have right now is that, Rahul, what about the reversal? Can it reverse from here or not? See, my point is very, very simple. A lot of bad news has already been factored into IT stocks right now. That is point number 1. Point number 2 is that if you look at the Nifty IT's PE ratio last 3 years, it has come down to almost 24. The median PE has been around 27. So definitely it looks to me that it is oversold in my view. Again, I could be totally wrong here. But the most important point comes is the reversal. Can it reverse from here or not? That is the most important question. And for that, there are 2 triggers that I see. Trigger number 1 is the US-India trade deal. The day US-India trade deal gets signed off, it is likely that we might see a relief rally across the market as well as in IT stocks. That is a possibility number 1. The second trigger here is even more important, which is all about earnings of Indian IT companies. So Q2 earnings are going to start very, very soon, and Q3 earnings also will play into how much of reversal we see in Indian IT stocks. Of course, I don't know what the earnings will be, so I cannot predict. But for IT stocks to take a meaningful reversal from here on, we definitely need to see the earnings growth for Q2, Q3, and as well as the future guidance that the management is giving for each companies. Now, in my view, what you want to do with IT index or not, it is your choice. From a PE ratio perspective, it looks very, very good to me. A lot of bad news has been baked into this prices right now. So I cannot say more than that. But if you want to build any positions into Indian IT stocks, please make sure you're very, very careful in terms of picking your stocks. Let me present to you some last 2 to 3 minutes of data about individual IT stocks so that you understand the complete picture. Now, what you see on my screen is a list of IT companies here and their quarterly profits in terms of YOY increase or decrease. as of Q1 FY25. Now broadly, I've categorized these stocks into 4 buckets, and let me run you through each one of them very, very quickly. First bucket is the companies that have seen degrowth in their profits. For example, Tata Elxsi, KPIT Technologies, HCL Tech. If you see as of Q1 FY25, there has been some degrowth here, and these companies have been trading at a very, very high PE multiples, 44, 39, 22 respectively. HCL not so much, 22, but it has seen some degrowth here. Now these companies, the question you need to ask is that, do you want to invest in companies like these where you've seen the degrowth and the PE is still very, very high, right? That is a question you need to ask yourself. Second type of the companies is that you see here low growth companies, companies like Sonata, TCS, Infosys, Wipro. If you see very low growth in terms of the profitability, low single digit growth is what we have seen here. Here the PE multiple is not very high. 22, 21, 22, 18. So these PE multiples are not very, very high in my view. Now, if you want to pick any of these companies, listen to their Q2 management commentary, see what their quarterly results are. And if you see that there is likely to be a good visibility in terms of earnings, these companies are trading definitely at a very, very good PE in my view. So you could look at these companies. Third type of the companies is the medium growth companies, companies like LTI, Mindtree, Intellect Design, Tech Mahindra, and so on and so forth. Here the growth has been in double digit, 10%, 24%, 30%, but the PE is also very, very high, 39, 30, or so on and so forth. Again, in my view, you have to look at their earnings growth. Are they likely to sustain these profits or not? And whether you are happy to pay high PE for these companies or not. Last category, fourth category is high growth. Again, these comes Persistent Systems and Coforge. These two companies, mid-cap IT stocks, they have been doing phenomenally well in the last 8 to 10 quarters. If you go and look at their results, huge growth in their profits. That is what you will see, and therefore they trade at a relatively highest PE valuation when it comes to IT sector, around 52 to 54, depending on, I don't know when you're watching this video. These companies are suitable for investors that are growth investors. They like to hold growth companies and they don't mind paying high valuations. Again, choice is yours. I've sort of given you this summary view, and also I've just given you the broad view here. You will have to go and deep down into each of these companies if you want to pick any company. But the key points that you need to look out for is how much of AI innovation the company is doing, what is the future guidance that the management is giving, and what is the PE multiple that you're buying at. Even if you look at these 2 to 3 parameters, you are likely to make good decision when it comes to picking IT stocks. Now, if you want to also get exclusive content, you can consider joining my YouTube community. Almost on daily basis, I talk about various assets, for example, stocks, mutual funds, etc. You're going to learn practically almost on daily basis. The feedback of this community has been excellent. Simply go to my channel, find the join button and be my guest. With that, I hope you liked this video. If you like this video, press the like button. Let me know in the comments a simple thank you. Become a subscriber of my channel so that you continue to learn from my upcoming videos. With that, I hope to see you in my next video. Until then, keep rocking.